Welcome to the SpaceX Wealth Guide. We'll explore how to approach building generational wealth with the expected $2.1 trillion IPO, comparing direct stock investment with index funds. Hey everyone, welcome back to FactorDad. Listen, yesterday, June 12th, the market absolutely lost its mind. SpaceX officially went public. It's the biggest IPO we've ever seen, and the hype is completely out of control right now. But before you open up your brokerage app and hit buy out of pure FOMO, I need you to pause and watch this. Today, we're having a real talk. I'm going to show you how you might actually own SpaceX already without lifting a finger, the exact dates it hits your 401k, and the absolute best time to buy direct shares so you don't get trapped by Wall Street insiders. Let's get into it. So before we buy anything, we have to know what we're actually buying. At a $2.1 trillion valuation, SpaceX is priced for absolute perfection. Why is it worth that much? Because you're not just buying a rocket company. You're buying four massive businesses rolled into one. First, you've got Starlink. This is the cash cow, over 10 million subscribers paying monthly for internet. Second, they have a total monopoly on orbital launches right now with the Falcon 9 and Starship. Third, their XAI infrastructure. They are pouring billions into supercomputers, making this a backdoor play on the whole AI revolution. And finally, Starshield, which handles highly classified, multi-billion-dollar defense contracts. Now, how do you actually get a piece of this machine? Here is the big secret, especially if you're getting a late start to investing. You might be buying SpaceX next week without even pressing a button. If you've got part of your paycheck auto-investing into a standard 401k target date fund, or a broad market fund like Vanguard's VTI, your fund manager is going to automatically start buying SpaceX for you next Friday, June 18th. This is huge. It gives you effortless, diversified entry into this massive IPO without betting your own cash on a single volatile stock. Now, if you hold the NASDAQ 100, like QQQ, you'll get yours a little later, on July 6th. And if you're strictly an S&P 500 investor holding VOO, you're going to have to wait until mid-2027. Let's talk about Fidelity for a second, because if your retirement accounts are with them, there's a massive split in how they're handling this. If you hold their actively managed mutual funds, like the Contra Fund, Blue Chip Growth, or Growth Company, you basically have a cheat code. Humans run these funds, not algorithms, so they probably bought huge blocks of SpaceX on day one. You have exposure right now. But if you hold Fidelity's popular zero-fee index, FZROX, you've got what I call the shield. FZROX has a strict rule. It requires a 15% public float to protect investors from early volatility. Since SpaceX only released about 4% of its shares, FZROX is forcing you to wait until January 2027. And honestly, that's probably a good thing. And that forced wait brings us to the most critical part of this video. If you are dead set on buying direct shares of SpaceX today, you are walking straight into a trap. It's called the lockup expiration. When a company goes public, the insiders, founders, and early investors are legally blocked from selling their shares right away. But when that lockup expires, millions of shares suddenly flood the open market. All that new supply usually drops the stock price, trapping regular guys who bought at the peak of the IPO hype. We are watching two dates, a small early release in September and the main event, the 180-day full expiration in mid-December. The smart money on Wall Street? They aren't buying today. They are waiting for December. All right, so here is your three-step playbook. Generational wealth is built on patience, guys, not FOMO. Strategy 1 is the passive play. You do nothing. Keep auto-investing in your 401k or VTI and let them buy SpaceX for you next week, totally stress-free. Strategy 2 is the sniper. Park your cash in a high-yield savings account paying 5%. Wait patiently for that big lockup expiration in December. Let the insiders dump their shares, and then you buy the dip. Strategy 3 is the DCA method. If you just can't sleep unless you own some direct shares right now, take your cash, divide it by 12, and just buy a small, equal amount every month for a year to smooth out the ride. The bottom line here? SpaceX is a once-in-a-generation company. But you don't need to rush into a once-in-a-generation investment on day 2. Let the dust settle. Watch those lockup dates, or just let your 401k do the heavy lifting. If you found this Real Talk breakdown helpful, hit that subscribe button so we can keep building generational wealth together, without the stress. Let me know in the comments, which of the 3 strategies are you going with? I'll see you in the next video. Stay smart, FactorDads.